Hello and thanks for joining us at interest.co.nz. I'm Jenee Tibshraney and today I'm joined by Finance Minister Grant Robertson. Thanks for your time, Minister.
No worries.
Look, everyone is putting their hands out for support at the moment as we're in lockdown. I'd like to begin with talking about the most vulnerable people first. The number of emergency food grants distributed by MSD increased by 64% to nearly 36,800 in the week ended August 20. So within the first few days of lockdown, nearly 14,400 people rushed out to get food grants. That seems like a lot of people who are living hand to mouth, and I appreciate benefits have gone up, but so has inflation. Minister, can these vulnerable people expect to receive more COVID-related government support?
Well, we're certainly aware of the fact that food security is a massive issue for some New Zealanders, and that's the reason why we've given additional resources to the Ministry of Social Development to be able to deal with that. So just last week, Minister Cipollone and Henare announced an additional boost in funding to the MSD Community Connector program. And quite clearly, there are a number of New Zealanders who do live week to week in terms of their food, and we want to make sure that they have security during this time. In terms of an overall response, as you've noted, we have increased benefits. They go up again in April, and we want to continue to lift the incomes of the lowest income New Zealanders. But in an emergency situation, the work that MSD is doing is exactly the work that needs to be done. Longer term, we're trying to boost those incomes and improve the financial security of those people.
During this COVID crisis, we've seen the wage subsidy and higher demand on the back of loose monetary policy keep people employed, which is great, but low interest rates have also intentionally boosted house prices and inflation, both of which have been to the detriment of the lowest income earners. These people are now paying the price for policy designed to make the wealthy wealthier. How are you responding to the side effects of this?
Well, I don't necessarily agree that the design from certainly a government point of view was to exacerbate inequality. What we did see was house prices rise when the forecasts had been for the opposite to happen. And clearly we've moved from a policy point of view to try to address that through things like the interest deductibility policy that we brought in and the extension of the Bright Line test. But we obviously are continuing to keep an eye on the overall impacts of this new outbreak. But at this point, I'm not seeing anything that indicates we're likely to see a further exacerbation of that in light of the policy changes. And then obviously we've got the shifts that the Reserve Bank have made as well in terms of the likely further tightening of LVRs and introduction of debt to income ratios. So I think the policy package is now in place to deal with many of those issues. And, you know, the earlier outbreak did cause the opposite effect of what was thought to have happened from the early forecasts.
Okay, but that's while the Reserve Bank has clearly been very hawkish and signalled its clear intentions to hike interest rates, they still do remain very low. And the Reserve Bank has said that the sort of neutral interest rate where the OCR is neither contractionary nor stimulatory is 2%, which is still low. ANZ economists think it'd be even lower at 1.5%. So we likely still remain in this this environment with very low interest rates, which as we know, does support the wealthy, potentially, in my view, at least, quite a bit more than the poorer people. I mean, I'm just wondering how your response, and I keep asking you this question, how is your response shifting to acknowledge that impact?
As I say, our response has shifted since the last outbreak. That's where those policy changes have come from, and we continue to keep a very close eye on the housing market to ramp up the amount of supply that we are able to put into that housing market, and to make sure that we're supporting those on low income. So, you know, our thinking has changed given that the advice changed last year, and I think we have moved on those policy initiatives. None of them are going to have an impact yesterday, but we do hope that they'll have an impact in the coming months, and we are seeing a slowing rate in the increase of house prices. And we've now seen in the numbers for August that has happened even further. Now it's more gradual perhaps than some people might like, but it is a sign that I think the policy initiatives and signals are starting to work.
CoreLogic's house price index, according to that, the average house price value increased by $15,000 just in August, and in the year to August, the average value rose by 27%. I mean, that might be slowing from 30%, or I don't know exactly, but 27%. I mean, do you still see sustained moderation as your goal when it comes to house prices?
Look, as I've said before, I have no desire to crash the housing market. What I do have is a desire for is more sustainable house prices. We are seeing that rate of growth decreasing, and I believe as further policy initiative, yep, that's an annualized figure. But if you look at that, if you look at the last 3 months, you can see a steady decline in the rate of increase. That is the beginning, I believe, of those policy initiatives working.
Okay, yes, and just to dig into that a little bit, investors have been less active, and that has been the government's policy goal, to sort of shift investors out a wee bit to make way for first home buyers and other owner occupiers. But you've said you don't want to crash the housing market, but how much do you want to cool it by?
Well, we certainly do want to cool the market, and that's been the whole intent of the policy. I'm not setting a percentage on that, because there are a number of different influences on the housing market, some of which are outside the control of government. But it certainly is my view that prices remain unsustainable. So there is further cooling to be done in the market, and I believe the full impact of the policies that we've put in place will come through. But as you noted yourself, we've seen a shift away from investors within the market. That was part of the tilting of the balance that we wanted. But obviously the Reserve Bank and ourselves continue to look at where we are and continue to believe we're in an unsustainable place, and we will work on both the demand and supply sides of the market to achieve a more sustainable market.
But I mean, the market is not going to be sustainable still, or if house prices only increase by, say, 7%. You know, these prices are still super high, you know, around $1 million or 800,000, depending on where you are, for an average house. So why don't you target a slight fall in house prices? Given, like any asset, they should go up in value, and sometimes they should go down. That's just the way assets.
And I do note in the Reserve Bank's latest monetary policy statement, they do see that occurring in their particular forecasts. And so I've never set out that as a goal. What I want to do is set the conditions for a more sustainable housing market from the levers that the government has. The Reserve Bank has its levers, and so that continues to be the policy approach. The outcome of that, still by most people's forecast, is a significant slowing in the growth of house prices, and in the case of the Reserve Bank's latest forecast, they actually see it going to a drop.
Okay, well, we look forward to seeing that drop happen. Some of us might. Right, just want to talk about the banking sector now. It has received an enormous amount of public policy support, both directly and indirectly, through this raging housing market. Their profits are right back up. We obviously don't want banks to collapse, but their profits are once again very high. But banks have yet to commit to waiving contactless payment fees. Do you think, what do you want to see from the banking sector during this lockdown, and do you think they are doing enough?
Well, I certainly want the banking sector to get alongside everybody else in our fight against COVID and do everything they can to support their customers through this. And generally speaking, the conversations I've had with them indicate their willingness to do so. So I met with chief executives of banks last week, and I will meet with them again this week. Last week, they weren't reporting a large number of people coming through their system with concerns about, for example, mortgage distress. But I expect that the longer that restrictions are on, the more people are going to feel that stress. So for now, my advice remains the same to customers, which is to get in touch with your bank. They have the facility to help you manage your finances. On the question of contactless payments, that's actually an issue I will be raising with the banks this afternoon. The longer we stay in this period of level 4 and level 3, the more pressure that is putting on those both customers but also business owners. I thought that was a great initiative from the banks last time, and I would certainly be supportive of them doing it again.
How harsh will your words be? Will you say, look, please waive them, or just?
Well, I've certainly got the feedback from both vendors and consumers that this is something that I'd like, and I'll certainly be asking the banks to look at it again, as they did last time. I mean, you make a very valid point, which is across the economy, New Zealand businesses have done fairly well over the last year. The rebound from the last lockdown was quick and put us in a very strong position. We all have to share the burden again now as we go through this this new outbreak. And I'd certainly be looking for our banks to do that. They've expressed in their comments to me a willingness to be helpful, and so that's what we should be now seeing.
Okay. Will the government and the Reserve Bank support banks and help them to defer mortgage repayments like was done last year?
Yeah, look, obviously we'll need to get into that discussion. As I said, they were not reporting large numbers of people coming forward with those circumstances. Clearly, there are responsible lending obligations on the banks, which they are very keen to make sure that if they do offer any kind of deferral type scheme that they don't breach. That's one area where we and the Reserve Bank can work with them to ensure they can offer what they need to their customers. But right now, banks are offering packages like mortgage deferral. It's a matter of customers getting in touch. If there's a need for a wider scheme, as we had last time, we can look at that.
Okay. Just back onto housing a little bit, the removal of interest deductibility, when will the government announce exactly how that's going to work?
Well, we're sticking to the timeline that we set, so we'll do that before the 1st of October.
Can you be more specific?
Not quite. You might imagine that one or two meetings have shifted around over the last few weeks, but Minister Parker and myself have been looking at the detail of our proposals over the last week or so, and so that announcement is not far away.
Okay, just wanted to talk about businesses now. National, along with various business groups representing the retail and hospitality sectors, are calling for the government to subsidise small businesses' rent. Would you consider doing this?
Look, at the moment, we're looking at a range of potential options. I tend to be more attracted to using things that are existing policies that we can implement quickly. This time round, we've had the resurgent support payment that is designed to help meet fixed costs. I recognise it's only a contribution, just as the wage subsidy is only a contribution. This is the approach we've taken from the beginning, is to provide as much support as possible to keep people attached to their jobs, to keep businesses going, but equally understanding that the government can't pay every bill of every business across an outbreak.
Okay, so nothing new for rents. Businesses also.
Well, we continue to look at commercial rents as an issue, but as I say, one of the purposes of the resurgent support payment was to help people meet those bills. And the other point to note is the advice I've had from the Ministry of Justice is that the number of, or the percentage of businesses who have the clause in their contracts that if they cannot occupy a premise, their rent is either reduced or eliminated. That is a much higher percentage now than it was at the start of the outbreak last year. But we're keeping our eye on that and getting further advice from the Ministry of Justice. I was just pointing out that I tend to favour using schemes we've got because they can be implemented more quickly. Sure.
Okay, businesses also obviously saying they want certainty. It's a tough thing in these circumstances. Is the government's plan to still stick to the plan of starting to reopen the border in the first quarter of 2022? And will this continue to be the plan, even if everyone's had a chance to be vaccinated, but the vaccination rate remains at a suboptimal level of, say, 80% of over 12s? Look, we really do need to get the vaccination rate as high as possible to enable that border reopening to happen to its greatest extent. The short answer to your question is yes, we are continuing with the reconnection strategy. We think it's really important that we plan for that in 2022. The whole point of announcing our response to Sir David Skegg's group was to give certainty. The business groups responded very, very well to that strategy. So our plan is to continue to do that. The reality is that the take-up of vaccination has been extraordinary in the last couple of weeks. And so my optimism that we can reach a very high percentage of the population is high, but it is an important marker post in being able to further open up. But the plan that we put in place is the one we're working to. Okay, when will businesses and organisations find out which ones have permission to send staff overseas and then have them return and go through more lax isolation setups? This was announced that the plan was for this to start happening in October. Is that on track? We are still working towards that date, but I expect most people will understand that the outbreak may cause some slight delay in that, but it is still our intention to move towards that piece of work. And not October then?
Well, hopefully in October. I mean, I know everybody wants certainty, and it's just very, very hard at the moment. You know, the same officials who are working on aspects of our response to this immediate outbreak are those that are working on that pilot scheme, but it definitely is still our intention to go ahead with the pilot scheme. Any changes to the dates would be announced in the very near future.
Will any MIQ spots allocated to various industries, will they be cut to make way for COVID cases?
No, that's not our plan at this stage. We are going back through and looking at the group bookings that we've got to see whether all of them are necessary. But our attempt to ensure that we have an allocation for the critical workforce needs that we've got remains. Overall, at the moment, there is pressure on the MIQ system because we need more spaces for the quarantine aspect of MIQ. And so that is putting pressure, but I haven't seen any advice at the moment that indicates to me that that will change those allocations. You'll be aware that at the moment there's a pause on new allocations being made while we get a handle on the scale of the need for those quarantine places, but it is the government's intention to both reopen that in the near future and continue with the support that we've got for businesses to get the workers they need.
Okay. Minister, finally, the Reserve Bank is considering introducing an insurance policyholder guarantee scheme to pay out claims in the event of an insurance company failing. This is kind of like insurance for insurance company customers. And it's kind of a little bit similar like the bank deposit protection regime that's coming into place. The Reserve Bank is just consulting on this, just open to the idea, hasn't committed to it. But would the government consider backstopping such a regime? So for example, if all these levies that insurers pay into a fund, if there's not enough money in the fund to pay out in the event of a company collapsing, will the government backstop it?
Yeah, I mean, it is very early days with this, and as you say, it's been deliberately couched by the Reserve Bank as something they're open to, as opposed to something that they're committed to. From our perspective, what we've got to aim for here, if it were to happen, is a self-funding scheme. Similarly, as we've talked about with the deposit guarantee scheme around banks and other financial institutions, we would want to make sure that it is self-funding. In the case of that deposit guarantee scheme, if there were a need at the beginning of the scheme for the Crown to backstop it, then that's what we've signalled we would do. When it comes to insurance, we haven't had that detailed conversation, but obviously if this were the policy path that the bank wanted to go down, we would then have to consider that. One thing I would say here is that just as it was with our work on banks and other financial institutions, if you look back to the Canterbury earthquakes, it's quite clear that whatever happens, if an insurance company collapses, people will turn to the government. And this is the reason why, you know, we've looked at the earlier scheme around the deposit guarantee scheme and said, look, in the end, the government has to be here in some form or other. So if that's a short-term way before a self-funding scheme gets going, then perhaps we can consider that. Early days in terms of insurance, but obviously, as I say, people tend to look to the government in these situations anyway, so the government needs to consider what its best options are.
Okay, sure. Finance Minister Grant Robertson, thank you for your time. Much appreciated. I'm Jenee Tibshraney from interest.co.nz.